relating to income tax and for other connected purposes. It has since been amended several times. On 29 June 1999, URA acquired a land lease title of plot M193 Chinawataka Road, Nakawa Industrial Area. It is here that URA would later erect a state-of-the-art tower. In 2002-2003, Ms. Ann-Britt Asland replaces Mr. Rakakoko as the Commissioner General of URA. In the same financial year, Lady Justice Julia Sebutinde is given the keys to tackle corruption head-on. She leads a commission of inquiry that would later change the trajectory of the whole organization. On 1st July 2004, Allen Kajuna is given the mantle to transform URA as the URA Commissioner General, leading a cleansing and restructuring exercise that would put URA back on track following the successful completion of the 17-day inquiry. Allen would go on to lead URA into its renaissance period. Regardless of all the efforts, since the inception in 1991, customer satisfaction was low. Appropriate information was largely inaccessible, and taxpayers often had to make multiple visits to the URA office to complete a single transaction. To reduce long processing times, low accountability and transparency, Uganda Revenue Authority sought to become the most efficient revenue collector in East Africa. All this would change with the introduction of the e-tax portal. URA started the Authorized Economic Operator Program way back in 2009, kicking off the project to implement a unique program that offers a triangulated compromise between compliance, facilitation, and control.
AUO categorizes clients based on risk. So low-risk traders are given benefits in terms of simplified procedures, and so they will go through the clearance process seamless, rather than the high-risk clients who have to go through mandatory checks, maybe 100% verification and all that. And there are several other benefits.
Currently, there are 96 AEOs who are responsible for more than 41% of the volumes of our international trade operations. With new changes and advancement in technology and improved transparency, faster trade facilitation, and linkages with other trade facilitation platforms in Uganda and the East African region at large, the institution upgraded from a SCUDA++ to a SCUDA World, which later facilitated the one-stop border points and the regional electronic cargo tracking systems.
We've seen even the volumes that come through greatly rise up, because now there is faster clearance, a seamless flow of cargo, movement of goods as well, and the process is simplified. In that way, there's an increment in the volumes of goods and services that go through the border.
In 2014, URA saw a change in leadership. Doris Akwo, who was at the time Commissioner Legal, assumed the role of Commissioner General from Allen Kajuna. Doris would go on to consolidate the modernization gains put in place during the Allen era. She later went on to launch the Uganda Electronic Single Window on the 4th of November 2016. Under her leadership, URA saw the blueprint of the digital tracking solution take shape in 2019. With 6 gazetted products, now 8, having their products affixed with digitally traceable tax stamps. The system would go on to help URA protect traders who have been struggling with unfair competition from smugglers and manufacturers of counterfeit products. On the 29th of March 2020, the URA Commissioner General, John Rujochi Musinguzi, was appointed to lead URA. John is so far leading the march towards the future with a new strategic direction, mission, vision, core values, client value proposition, and a tech-driven service delivery upgrade.
Capo, you seem to be in a hurry. Where are you going to?
I'm gonna pay URA a visit.
Why would
Carrying
anyone
on from
visit?
where his predecessor left off, the Commissioner General, John R. Musinguzi, launched Kakasa, a threefold business solution which includes IFRIS, DTS, and the Voluntary Disclosure Program. With 1 year in the books, under the leadership of John Musinguzi, URA has seen several efforts to facilitate tax education and outreach activities in support of the national agenda of domestic revenue mobilization. With the introduction of the auto conversion in customs processes, the Tujenge Uganda bus, a bus designed to offer mobile tax services, especially to remote areas that lack the proximal access to URA offices and electronic services. And the URA TV, a state-of-the-art online TV with a well-facilitated studio dubbed the URA Drift Studio. It is from this facility that URA is running programs lined up of 14 business-leaning sector-based tax education programs for taxpayers, as well as driving internal communication to achieve a shared understanding of the new direction for staff. These last 30 years have been a ride, and it would not have been possible without you, the people of Uganda. We promise to commit the next 30, 60, even 100 years to you, the people of Uganda, to serve with integrity, patriotism, and professionalism. We vow to never grow weary, nor tire, as we carry out this our mandate to liberate our country, Uganda, from economic independence. We are 30 years stronger.
Uganda Revenue Authority. Developing Uganda together.
Uganda Revenue Authority reminds all taxpayers to file their monthly returns and make all outstanding payments by the 15th of every month. Please comply to avoid penalties and interest associated with failure to file returns and payment of these taxes. For further clarifications, call us on our toll-free line 0800-117-000 or email us on services@ura.go.ug. Please ignore this message if you have already complied.
Uganda Revenue Authority. Developing Uganda together.
A step-by-step process on how to file returns online. How to file a pay-as-you-earn return. Go to the URA web portal www.ura.go.ug. Click on Login. Provide your login ID and password. On the left-hand menu, point on e-returns under the column for original. Select Pay as you earn. Click here to download Payee Return Form. Save the template to your preferred location on your computer. Before filling out the template, click on Enable Content to enable macros. You should get a pop-up message. Please do not cut and paste any values in the sheet. Click OK. After filling in all the required information, validate the form by clicking the Validate button on the second last page of the return. Click Yes to generate an upload file. In case there are errors, click on the error sheet, correct the errors, save, and validate again. It is better not to rename the upload file. Go back to the home page and log into your account using your TIN and password. After logging in, under e-services on the left side, select Pay as you earn. Enter the period for which the return is being filed and click Check. Enter all the details required, browse the file, and upload the return. If the form fails online validation, correct the specified errors on the saved template from which you generated the upload file, save the file, validate, and regenerate another upload file. If the upload is successful, click Submit to submit your return. An e-acknowledgement receipt will be generated and a copy sent to the email address that you used at registration. Click here to print acknowledged receipt. Click here to print submitted application form. Uganda Revenue Authority. Developing Uganda together.
Mugasha, did you see the game last night?
I slept looking for a receipt. Up to now, I'm still looking for it.
What kind of receipt?
There is a certain receipt. I need to file my returns. I'm trying to find it.
By the way, Do you know these guys of URA asked for 3 million from me?
Me, I paid 500,000 only.
You mean you pay only 500,000?
Yes.
They asked for 3 million. Why am I being asked to pay more?
I don't know.
You must know. We have the same level of capital, same rent, same premises.
And it could be buildings, it could be a house, and they lease or rent this property out to another person called a tenant. But to be very specific and for purposes of income taxes, rental income tax, for purposes of rental income tax, a landlord is a person who earns or generates rental income from that property that they own.
Okay. Is there a difference? I know you've mentioned property tax, yeah? Property tax. Is there a difference between property tax and rental tax?
Yes, there's a difference between property tax, also called property rates, and rental income tax. Property tax is charged in Kampala by the KCCA, and property tax is levied on property that is owned by the property owner, irrespective of whether they're generating rental income from that property or not. So it is a levy that is applied on the value of that property. Usually the KCCA uses what we call the rateable value. On the other hand, rental income tax is tax on rental income generated by landlords from these properties. So the major difference is that for rental income tax, an income must have been generated. And for property tax, it is paid based on a calculated value of the property, irrespective of whether income is generated from that property or not.
Okay, so a taxpayer may be wondering, is this a new tax? Because the way you've explained it, there's quite a difference. So someone may wonder, is this a new tax? And if it's not new, how long has it been there?
A rental income tax has been there for a long time. I think for as long as the other categories of income, like business and employment. Admittedly, the compliance levels have been so low, and in the recent past, we have stepped up our focus and compliance action on the rental income tax. So many of the landlords are getting to know about it more now, but it's been there for a long time. There's been some changes, specifically in 2014. There were changes on how the rental income tax is administered for non-individuals. Prior to 2014, for non-individuals, the rental income tax was part of what we call business income. But after 2014, rental income tax was ring-fenced from the other categories of income, specifically business income. And for non-individuals, effective July 2014, rental income tax should be accounted for separately. But for individuals, it has been accounted for separately even before 2014, and up to now, it is accounted for separately now for both the individuals and for the non-individuals.
Thank you, Paddy. Apologies for the sound. I've just been informed that our sound wasn't good. So for purposes of our viewers, we're going to reintroduce ourselves. My name is Elizabeth Nakiru, and I'll let my guest introduce himself. And our topic today, like I was saying earlier, is tax obligations of landlords. Thank you.
Okay, thank you so much, Elizabeth. I'll introduce myself again. My name is Paddy Ocheng. I am the manager rental tax in the Domestic Taxes Department, URA. I am very happy and pleased to be here. I'm hoping that we'll have a very fruitful and productive engagement.
Yeah, maybe a small recap of what we just discussed. Hopefully, we shall be able to meet those who joined or who were there and didn't hear anything. Paddy, you indicated that property tax is different from rental tax. Could you explain that just a little bit in a second?
Okay, quickly, the key differences between property tax and there's been a lot of confusion between the two. The key differences is one, property tax is levied by local authorities. For Kampala, for example, by the Kampala Capital City Authority. And it's levied on properties based on unassigned value, what they call the rateable value. So it is levied on that value of the property, irrespective of whether the property is generating rental income or not. On the other hand, rental income tax is levied on income generated by landlords from these properties, and rental income tax is administered by the Uganda Revenue Authority. So the key difference is that revenue must be generated for rental income tax to be levied, and it's administered by URA.
Yes, for purposes of knowing who a landlord is in regards to rental tax, who is a landlord?
A landlord generally is any person who owns property, and this property could be land, it could be buildings, it could be a house. Yes. And this person or the owner of this property leases or rents this property out to another person or an entity called a tenant. But specifically for rental income tax purposes, a landlord is a person, and this could be an individual, it could be an individual, it could be a government body. So any person that generates rental income from property that is owned by them is considered a landlord for rental income tax purposes.
Okay, Paddy, a taxpayer could be out there and they have their land, or they have a property, or they have a building, but then they decide to say, let me rent it out, to say the land is mine, and they say, let me rent it out to you, Paddy, and you decide to do your own business with it, but you pay me, let's say, a monthly income. How is that constituted as rental tax? Is it also rental tax, or
that's rental tax? That's rental tax income, and I'll read this the way it is defined in the Income Tax Act.
Yes.
Rental income is income that is derived by a person for a house. It could be a space that can be rented out.
Okay.
So to specifically respond to your question, Elizabeth, if you are leasing land to another person, or renting it out to another person for use, this land is part of what we call immovable property.
Okay.
So the consideration that you get for leasing out or for renting out this land is considered rental income. And as such, rental income tax shall apply on the income that you generate from this lease.
Okay, so do I file separately for rental income and income tax, or I just file it as one return?
Yeah, I mentioned earlier that this category of income was ring-fenced from the other classes of income, such as the business income.
Okay.
So in filing a return for rental income, the rental income needs to be declared separately.
Okay.
And the related expenses also categorized separately in arriving at what we call the chargeable income for rental income tax purposes. And then the relevant tax shall be applied on the derived chargeable income. So rental income needs to be filed and declared separate from the other classes of business. The same applies to the expenses that have been incurred in generating this rental income. They should specifically be declared and charged against the separately declared rental income.
So if I'm dealing in rentals and rentals are my sole business, do I file it as rental income tax and business income?
If
rentals are just my business,
you only have rentals as your source of income,
yes,
you will file a return that clearly indicates this as rental income because it still remains rental income and not business income, even if it's your sole source of income. So you still declare it as rental income, and then the expenses that have been incurred in generating this rental income will also be specifically declared in your return, and then we will arrive at what we call the chargeable income for rental income tax purposes, and then the appropriate rates of tax shall be applied to that chargeable income to arrive at the rental income tax payable. But if a taxpayer has rental income and maybe another business, for example, you might have a shop that you run, but you also have units that you generate rental income from. You file a single return, but in that return, there are sections that are specific for declaration of the income from business.
Yes.
That's the shop, and the expenses related to that shop. But also there are sections in that same return where you declare the income that you generate from your rented units and the expenses that have been incurred in generation of this rental income separately in separate sections, but in the same return.
Oh, okay. So speaking of expenses, you have mentioned expenses for quite a number of times. What allowable expenses or deductions are accepted by URA when it comes to rental income?
Currently, these vary depending on whether the landlord is an individual or an individual. I'll start with the individuals. In the current financial year, there are no specific expenses that are allowed for individuals. What happens for individuals is that we look at their gross rental income for a year, and then we allow them what we call a tax-free threshold of Uganda shillings 2,820,000. Now, the difference between the gross rental income and this tax-free threshold is what we call the chargeable income, and tax at a rate of 12% is applied on that chargeable income, the difference between the gross and the tax-free threshold of 2,820. Whereas for non-individuals, non-individuals are allowed expenses up to a cap of 50% of their gross rental income. So in case your actual expenses exceed 50%, the allowable expenses in determining the chargeable income will be capped at 50%. But in case they're below 50%, then the expenses as incurred will be allowed in arriving at the chargeable income, and thereafter for non-individuals, a tax rate of 30% is applied on the chargeable income.
Oh, okay. That's quite an explanation, and I just hope that our taxpayers have understood. In case you've not got it, feel free to send in a question and Paddy will be ready to answer it right away. So moving on, when it comes to compliance, you indicated earlier that there were issues when it came to compliance with in regards to rental income tax. What are the compliance measures that URA has put in place to make sure that landlords are able to file and pay these returns of rental income without any problem? And if they have an issue, how have they been treated in regards to compliance?
The first and most important for us is to ensure that we work with our taxpayers and share this information on the requirements to comply
Yes.
in a variety of channels. Now, one of those channels is this webinar that we are having.
Yes.
So we've carried out a lot of sensitization. We have developed a lot of tax sensitization material on the specific subject of rental tax that is in a variety of languages. So this can be accessed by our taxpayers, but you can also go on our web portal. There's a lot of information on how you can comply with your rental tax obligations. There's a step-by-step guide on how you can apply for registration, how you can file your return, and how you can make payment of your tax. There's a tax guide that also indicates how the rental tax can be computed. But in addition to that, we've also had collaboration with other entities, the KCCA. We've had collaborations with the National Water Ministry of Lands to share information so that we reach out to as many landlords to ensure that everybody is making a fair contribution to payment of the rental tax, because we realize that if this is left in the hands of a few, then the burden is really heavy in the hands of those few. So as URA, we are moving towards leveling the playground by reaching out more landlords to ensure that everyone who has an obligation to comply actually complies. We've also intensified our field visits for purposes of identifying landlords who are not compliant and ensuring that they're sensitized and handheld to register if they're not registered for rental. They're supported to file their returns and also guided on how they can make payment of rental income tax. For some of the landlords that are listening, some of you could have had an experience in terms of the audits and compliance reviews that we periodically carry out. So that's one of the other measures that we have put in place to drive compliance of rental income tax. Then lastly, Elizabeth, and this is quite important, we have a collaboration with Riponami, an American company that developed what we call the rental tax compliance system. And this system helps us to put data from different government ministries, departments, and agencies to be able to identify taxpayers who should be filing and paying rental income tax but are not. So we will be reaching out to you if you've not been complying. But my humble request is that before some of these initiatives are implemented, it is strongly advisable that you come voluntarily, come to any URA office, and let's guide you on how you can comply with your obligations. If you're out there and you generate rental income, like I indicated in the earlier remarks, please voluntarily come to URA and we will support you to ensure that you comply with your obligations.
Oh, thank you, Paddy. There are quite a number of questions coming in, and I would like us to answer some few as we go on with our conversation. Now, for just people have been asking about VAT and withholding tax in regards to rental tax. How is a landlord supposed to treat VAT on land? Are they supposed to collect it, or are they not supposed to collect it and remit it to VAT, to URA?
VAT
and withholding tax.
Okay, I'll start with
Okay,
VAT and then maybe I'll get into explaining how the withholding tax works.
Okay.
For VAT, VAT is charged at a standard rate of 18% for a certain category of supplies that are considered standard rated. Now we have certain supplies that are considered exempt and others considered zero rated. These attract VAT, the zero rated ones attract VAT at a rate of 0%. Now, in specific reference to rental income, as a landlord, if the rental income that you generate is commercial. In other words, it's you're letting out office space. These are business premises, shops, warehouses. The rental income that you generate from these commercial premises attracts VAT at a rate of 18%. However, if the rental income that you generate as a landlord is rental income from residential properties, then that does not attract VAT. However, the threshold of 150 million per year still applies in determining whether the landlord who generates rental income from commercial properties should register for VAT and account for VAT on this income or not. So VAT will apply on rental income if it is generated from commercial properties and if it exceeds the annual threshold of Uganda shillings 150 million.
Okay, withholding?
Withholding tax, on the other hand, applies in two ways. There is withholding tax on this rental income if your tenant is a designated withholding agent.
Okay.
So if your tenant is a designated withholding agent, if the tenant is a government ministry or government department, and they are mandated to withhold tax from any supply of goods or services, then they will withhold tax at 6% on your rental income as long as it exceeds 1 million shillings. Yeah, so if you're a landlord and your tenant is maybe government or a designated withholding agent, it could be some of these big companies, banks, for example, they will withhold 6% from the rent that they pay to you. So if it's 10 million, for example, they will withhold 600,000 and pay you net of the withholding tax. However, the withholding tax that is deducted is creditable. In other words, when the year ends and your rental income tax is computed, what was deducted in withholding tax will be used to reduce the rental income tax payable for that year of income.
Okay, thank you, Paddy, so much. Let's dive into some of the questions. Stefan Mwanga says, is a loan / a mortgage repayment an allowed expense that I can claim before paying tax?
Thank you. That's Stefan. Thank you so much, Stefan, for that question. The treatment of loans and mortgages, interest on loans and mortgages has quite oscillated because of the change in law. Currently, depending on whether you are an individual or non-individual, if you're an individual in the current financial year, then that interest will not be an allowable deduction because, like I explained earlier, the computation for rental income tax for individuals only allows the tax-free threshold of 2,820,000 and a flat rate of 12% is applied on the chargeable income. If you are a non-individual, as it is currently, yes, that interest will be allowed, but that interest expense plus all other expenses should not exceed 50% of your gross rental income. So if the interest expense for non-individuals that is properly allowable plus all other expenses that are properly allowable exceed 50%, then the 50% cap will apply. Elizabeth, relating to interest, allow me to explain how the interest expense was treated in the previous financial year before the amendment that is currently in force came into force. In the previous year, 2021, 2022, for the individuals, if you will remember, the expenses were allowed up to a cap of 75%. However, interest for individuals in 2021-2022 would be allowed as a separate expense in addition to the 75% cap. So the interest on mortgage and loans for individuals was not subject to the 75% cap, or in other words, it was not part of, or it shouldn't be part of the 75% cap. So the 75% cap for individuals in 2021-2022 would apply to other expenses. So if those other expenses exceeded 75%, they would be capped at 75%. But if you incurred interest on a mortgage or a loan as an individual, in addition to the capped 75%, the interest expense would also be additionally allowed. For non-individuals in 2021-2022, allow me to confirm and emphasize that the 75% expense cap did not apply to non-individuals. So non-individuals were allowed expenses as incurred, including any expense related to interest on mortgages, loans, as long as they are properly allowable, there's evidence of incurring these expenses and that these expenses were incurred in generation of the gross rental income.
Okay, thank you, Paddy. We have quite a number of questions, so we'll kind of move a bit fast. Irene Namutosi says, I stay in the same apartment as my tenants. I also have some furnished houses that are doing badly, so I don't earn on them, but I also use them for relatives, friends, and etc. But URA also includes these furnished houses that I rarely have tenants in. Please help. They live in the same apartment as their tenants, and they have units that are not making enough money, but URA still demands.
Namotosi, thank you so much for that question. Where you live in the same maybe apartment block with your tenants, because we are looking at the income that you generate.
Yes.
So if you live in one of the apartments, then there's no income generated from that apartment where you live. But for the others, where you have tenants, then rental income is generated from those. And in our self-assessment regime, where you're supposed to make self-declarations through the returns, you will clearly indicate in your return details of the tenants and the rental income that you generated for a particular year of income from those tenants. If they are furnished apartments, income from furnished apartments is not rental income. That's business income, because furnished apartments now take another form. It's a business. It's not the letting out or renting of immovable property as defined for rental income tax purposes. So if you're dealing in furnished apartments, that's business income. And as you're filing your business income tax return, still it is a declaration of what you actually earned. So you're not going to make a declaration for business income from furnished apartments if you have not earned. It gets back to complying and ensuring that you file these returns within statutory timelines and that you make very honest, correct, and accurate declarations in your returns.
Anonymous attendee says, why does the system bring a PRN with a liability even in instances where the tax has already been paid? The said liability appears on our ledgers, which makes it hard for officers to understand during ledger reconciliation.
Thank you, Anonymous. The idea of generating a PRN when a return is filed was to make it simple for the taxpayer to go and pay the liability that has been generated from that return. However, there are instances where the liability generated from that return that you have filed a portion of it was already paid, maybe through provisional taxes. Now, in those instances, you can go ahead and generate another payment registration slip and then go and pay the tax that is due. So the simplicity was for those who have not made any payment, so that instead of them having to go to generate another payment slip, it is auto-generated to make it easy for them to pay. However, like I explained, if it's not taking care of some credits, then you can generate another one. I can confirm that what is posted on the ledger is the liability, and it is reduced by all payments on that same ledger. So your failure to pay the tax that has been generated on this auto-generated PRN does not affect the ledger, because the ledger will capture the liabilities generated for that period and all payments that have been made for that period in arriving at what is outstanding or what is overpaid by the taxpayer.
Okay, Gloria Chohaire says, if I have my land idle, do I also pay tax for it? Idle land.
Gloria, if your land is idle, it means, again, borrowing from the definition of rental income, it means that you're not generating any income from it. So as URA, when you've not generated income, then there is no tax for you to pay.
Okay. Lillian says, good morning. 1, how do we treat property tax KCCA that is higher than 50% expenses above the threshold? And the second question is, if I have a new building, how many months are exempted from tax because I'm still paying loans and contractors?
I'll start with the property tax one. I think it's important for our listeners to note that property tax paid to KCCA is an allowable deduction when it comes to arriving at the rental income tax payable. Now, this eliminates the fear that most of our clients have as to whether there is a double taxation. Because double taxation is where there is tax on tax. Now, by allowing what has been paid in property tax as an allowable deduction in arriving at rental income, it means that the element of double taxation has been dealt with. So property tax is an allowable deduction. However, like I explained, the property tax plus all other allowable deductions for non-individuals will have to be capped at 50%. And that's the current law. Previously, all expenses were allowed as incurred for non-individuals. That's prior to July 2022. But with the current law in force, there's a cap of 50%. New building, how many months? There is no grace period. There's no grace period. The game works in such a way that if you're earning or generating rental income from this property, from the time you start generating this income, it will be subjected to tax net of all allowable deductions.
Okay. So there are no exemptions in the name of I'm still paying loans and contractors?
No.
That one is not provided for anywhere.
There's no provision for a grace period. There's no provision for exemptions to allow you fast pay service contractors and clear.
Yeah, but I think also a taxpayer should note that the moment you start earning income is the point at which you also start filing and paying rental tax.
Absolutely. And you see the principle, Elizabeth and listeners, works in such a way that if you do not earn income, then you do not pay tax. So even if you have these obligations, the tax is charged on the component of your income, net of expenses. So it's a net component that is attracting this tax. So the whole principle of taxing the net applies irrespective of whether the business has just started or whether the business has been in existence for a long time.
Okay, Florence Kasule says, hi, my question is why are we double taxed? Why doesn't KCCA and URA harmonize this? Which I think you explained a bit, because the KCCA property rate is an unallowable deduction when it comes to URA in regards to rental income.
That's
Maybe you
correct.
could just throw a bit of light on it, and we have other questions.
Yeah, I think this is similar to, if I'm to relate it to business, where KCCA, for example, requires that businesses have trading licenses, and then they collect fees for those licenses. And then URA also comes and imposes tax on the profits that the business has made. Now, relatedly, KCCA and the local authorities are governed by different statutes. And they're mandated to collect the property rates and all these other local revenues as per their respective acts. Now, URA has a mandate of collecting central government taxes. And these central government taxes principally are collected on income. So you're earning an income, pay a tax on the income that you have earned. So combining the two, especially considering that they are governed by different laws, might be a bit difficult, and also considering that the mandate of the local authorities and that of the URA are different, it might be difficult. But the comfort for me is a case of elimination of double taxation, like I explained earlier.
Okay, thank you so much. Nakato Shiwana says, I thought you file once, and in that filing indicate separately the rental income and the rental expenses, and also declare your other business. I think we talked about this. Anonymous says, comment about the rationale behind forceful registration for rental income in instances where the taxpayer does not actually have rentals. Do we do that?
Post registration is a function that we use when there is information to confirm that a taxpayer has rental income, but they're not registered for rental, or they have not voluntarily registered for rental. Yeah, so many times confirmation is done through the data sharing that I talked about earlier, the field inspections that I mentioned earlier. So by the time the first registration is done, it is usually because the landlord who generates rental income has not voluntarily come forth to register for rental income tax.
Okay. So to our taxpayers, it is not forceful registration if you do not have the rental units. If there is credible information that you've not declared and that you own the rentals, then that is when the function of forceful registration comes in. Fred Bariakatonda says, other than provision for expenses incurred, what other tax exemptions are there on rental income? And he also asked that we repeat for him the tax rates on rental income.
Okay, Fred, thank you so much. There are no specific tax exemptions, but I would call these maybe incentives.
Okay.
Yeah. Incentives could be in the form of the allowances that I said are allowed.
Okay.
Yeah. Now, some of those are the interest that I talked about. So there's consideration for the interest that is being incurred, because we are aware that many of these buildings, most landlords put this up using their money sometimes, but also borrowed funds sometimes. But also we have what we call deductions for capital expenses, what we call capital deductions. For buildings, we have what we call an industrial building allowance. In other words, there's a 5% allowance every year over a 20-year period to cater for the capital investment in putting up that property that is generating the rental income. Yeah, but let me respond to the request to repeat the tax rates.
Yes.
The current rates in force for individuals, the tax rate is 12%, and the 12% is applied on the chargeable income of that individual. Now, the chargeable income is computed by getting the gross rental income, year of income, and deducting what we call a tax-free threshold of Uganda shillings, 2,820,000. Elizabeth, if you can just allow me to put a bit of a computational, to give a computational impression of this.
Yes.
If, for example, an individual earns maybe 1 million per month from units that they have somewhere, say in Chisasi as an example, it means that in a year, this individual has earned rental income of 12 million. So we will reduce 2,820,000 from the 12 million.
Okay.
The difference is what we call the chargeable income. That difference of about 9 million or thereabout is what will apply 12% on to arrive at the rental income tax payable by that individual for the year of income.
Okay.
For non-individuals, the applicable rate is 30%. Now, non-individuals include companies, include what we call retirement funds. It includes government bodies, for example, because they also have to pay rental income if they generate rental income, rental tax if they generate rental income. So for non-individuals, I'll still give a computational illustration. If the non-individual earns income of, let's say, 100 million in a year,
Okay.
and then they come and capture all the expenses that they have incurred. So the instances where these expenses, including the property rates, including the interest, and the capital deductions that I talked about, if those are, let's say, 40 million,
Okay.
then the 40 million will be allowed in whole. Then the chargeable income will be the gross rental income of 100 million, less the 40 million that has been allowed in expenses. The difference of 60 million will be taxed at a rate of 30%. So 30% of 60 million is 18 million. So that will be the tax payable by that non-individual.
Okay.
Now, the capping applies in instances where the expenses exceed 50% of the gross rental income. So in our example, again, if the gross rental income is 100 million and the expenses incurred are, let's say, 70 million.
Okay.
Now, the 70 million is 70% of the gross rental income. So they will allow you up to 50% of the gross rental income. So the allowable expense for such a non-individual will be capped at 50 million. 50 million being 50% of the gross rental income.
Okay.
And then now tax will be applied on the chargeable income of 50 million at 30%, which would be a tax of 15 million Uganda shillings.
Okay, Sentongo says, greetings to you, Paddy. My question is about the losses incurred in respect of rental income in the previous years, say for the year 2021. How shall they be dealt with? Please give a more clear explanation on this. And he also continues to say, dealing with losses in the current regime of 50%.
Thank you so much, Sentongo. The capping of 50% for non-individuals takes into account expenses that have been incurred in this year of income, plus losses brought forward from the previous year of income.
Okay.
So again, if you can allow me to just use a computational illustration, Sentongo and other listeners, if, for example, you have a loss brought forward from previous periods of 20 million, okay, and you have 100 million as your gross rental income for this year, 2022, 2023, okay? And the expenses incurred for this year, let's say 15 million, okay?
Okay.
In arriving at your chargeable income, we shall add the 20 million, which is the loss brought forward from previous periods, to the 15 million, which is the expense incurred for this year.
Okay.
Now, this will give a total of 35 million. Now, this total for both expenses and losses brought forward is what will be subjected to the 50% cap. So, the loss is also considered in determining whether the allowable expenses have exceeded 50% or not.
Okay, Anonymous again has said, I understand URA has just amended the withholding tax return to include rent, but why do officers ask taxpayers to amend returns as far back as 8 years to pick rent?
Elizabeth, could you just kindly read that again
it.
so maybe I understand it?
Yeah, someone says, I understand URA has just amended the withholding tax return to include rent, but why do officers ask taxpayers to amend returns as far back as 8 years to get the rent? Is that even happening?
Anonymous, I think I'm aware of mistakes that many of our designated withholding agents made when they were generating withholding tax credit certificates and when they were withholding. I think the option for withholding tax on rent has existed for a long time. I think maybe if we can get some specific cases, but I am aware that it has existed for long, and it's mistakes that have been made where this withholding tax was wrongly categorized as business. It has caused issues where these credits do not hit the ledgers, the rental income tax ledgers. But I think it's a question of ensuring that the proper category of withholding tax is selected when filing the withholding tax return.
Okay, Lillian says, recently I paid rental tax, but I still get notifications about outstanding tax on the ledger. How can this be rectified?
Sometimes payments are made, but they are made late. So you find that by the time a payment has been made, interest has been charged because of a late payment, and many of our clients do not pay attention to ensuring that these payments are made within statutory timelines. So I have had instances where a landlord knows that they have to pay, let's say, 2 million rental income tax a year. But remember, this 2 million has statutory timelines in form of how much should be paid in provisional. If it's an individual, provisional is expected to be paid on a quarterly basis. So some of these payment timelines are not observed by landlords, and then you find that interest has been charged on late payment, and it's some of these things that cause reconciliation when it comes to ledger balance. However, if you have any ledger balance issue, please visit our rental tax office on Upper Ground at the URA Nakawa, or we have a team still that sits at Upper Ground that specifically handles ledger reconciliation balance issues, and also the teams at the stations can support you to be able to reconcile and establish exactly where the outstanding balance is coming from.
Yes, another one. Why doesn't URA provide clear details about allowable deductions and what makes up each allowable deduction? Is there a list of allowable deductions that is followed by URA, or it's at the discretion of the officer?
These have been shared. Again, I will encourage our dear listeners to go to our web portal. There is a lot of information, especially in our tax guides. Those specifics are provided on what is allowable and what is not allowable. Allow me to state that what is allowable and what is not allowable is not discretionary. It's not at the discretion of the officer. It is as guided by the tax laws. The general principle is that what is allowed as an expense should be an expense that was incurred in generating income that has been included in gross rental income. Save for certain specific treatments of certain expenses. For example, the interest on loans and mortgages that we talked about, it has special treatment provision in the tax law. So there are those that have special treatment, but the general principle is as explained earlier.
Yeah, and this information, like you say, can be accessed on the web portal. And I'm sure we've had prior sessions about rental income still on our YouTube. It can all be found there, and the web portal as well. Now, Elizabeth says, I was a tenant so many years ago and helped my landlord pay for rental income because he resided in the UK using my TIN, but URA keeps asking me to pay despite writing to them.
Elizabeth, I think what was done for you to pay rental income tax for your landlord using your TIN was erroneous. And what this means is that you registered as a landlord. And the demand notices and the follow-ups by URA are as a result of the erroneous registration that was done. However, that can be corrected. Please write to us, and we will come and maybe inspect just to confirm the facts, and then a correction will be made. The correction will be in the form of removing rental income from your TIN if it's confirmed that you do not earn rental income, and then registration properly done on the TIN of your landlord. And then in case there are any payments that were made using your TIN, which, excuse me, which might be erroneous, then, sorry. Yeah, sorry about that. Elizabeth was saying the correction could include moving payments that were erroneously made on your TIN to the TIN of the landlord.
Okay, thank you, Paddy. And someone called OJA says, what is considered a repair by URA? Some of my expenses like repainting, replacing broken window glass, replacing broken toilet seat have been categorized as IBA by URA. Please provide a list. What is considered as a repair?
Okay.
Yes.
Thank you so much, OJA. There are what we call expenses of a revenue nature and expenses of a capital nature. So there are tests that we run as URA on especially repairs and maintenance costs. So there are those that are really huge. Now, as long as these costs are substantial and they extend to a significant extent the life of the building, then they are considered capital expenditures and not revenue expenditures. So if they are considered capital expenditures, they are added to the cost of the building, and then they are allowed as capital deductions over that spread period of 20 years for IBD, like I mentioned earlier. However, if they are repairs and maintenance that do not have an effect of extending to a significant extent the life of the building, then those are expenses that will be charged as expenses wholly in that year.
Okay.
Yeah, so there should be a clear distinction between a similar class of expenses, but depending on their size and the effect that they have on the building, whether they should be capitalized or whether they should be fully expensed in that year of income.
Okay, and then our last question, comment about the withholding credits not credited to our individual ledgers for purposes of accounting for rental income. Maybe you can take a drink, it's fine.
The withholding credits, the challenge that we found, like I explained, I think earlier, is mistakes that have been made by tenants
Yes.
when they withhold, the designated withholding agents.
Okay.
When they withhold, and as they file their withholding tax return, many times they make mistakes and select another category of withholding,
Okay.
which could relate to business.
Mhm.
So when that is done, then that withholding tax cannot be credited to the rental income tax ledger.
Okay.
However, the solution usually is when such is realized, you write to us, and then a request can be made to the tenant to amend their return and capture the correct category of withholding tax, or those credits can be transferred by URA if confirmed that they actually relate to rental income. They can be transferred from the wrong category of business income to the correct one of rental income.
Okay, thank you, Pade. Our time has run short, and I believe we have answered most of our questions from the landlords that we had on board today. However, I just want you to make a small recap and your last words that you'd like the taxpayers to know, specifically landlords. What would you want them to take note or take away from today's show?
Thank you so much, Elizabeth. Yes. First, as my parting shots, I'd like to appreciate all the landlords who have tuned in to today's webinar. But also in the same spirit of appreciation, I'd like to appreciate landlords who have complied with their tax obligations. The payments of tax that you make are not taken for granted. We appreciate you. We celebrate you. Thank you so much. I would like to request landlords who are not compliant to please ensure that they take advantage of the window that we are giving for them to come forth and voluntarily register if they're not registered. For those who have been under declaring, to come and make or get supported to make amendments to their returns. For those who have not been paying, to ensure that payments of tax are made. I would like to assure you as well that we will provide you with all the support that you need. We will walk this journey of compliance with you. Please do not hesitate to reach out to us. Should it be an inquiry, if there is any kind of information that you would like to be provided with, if there's any form of guidance that you'd like to be provided with, please do not hesitate to reach out to us. We are more than ready to support you to ensure that you attain full compliance. In this month of April, and as we run towards the end of the financial year in June, please comply early. For those of you who have returns to file, you can file them as early as now to avoid the last minute rush of June that comes with slowness in the system sometimes, that may come with, forgetting because you have a lot of other things that you're taking care of. Please comply early enough and avoid the costs of non-compliance, the penalties, the forced registration, the estimated assessments, and let's develop country together. I thank you.
Thank you so much. Just a quick comment I got from Susan. She says none of our questions were addressed, but there's one question here where she asked, when rented property was built through a mortgage loan, is interest on the mortgage an liable expense for purposes of determining tax? We answered this, but you could just quickly go through it.
Okay,
Susan's
Susan,
benefit.
thank you so much. In this current financial year for individuals, it will not be specifically allowed because there is a flat rate of 12% on the chargeable income being your gross rental income, less a tax-free threshold of Uganda shillings 2,820,000. However, Susan, in previous financial years, interest on mortgage was specifically allowed for individuals.
Thank you so much. It has been such a pleasure to have you, Pade, with us today. I know that you've exhausted a number of questions, but as always, learning never ends. The landlords, the taxpayers still need more information. They still need to hear this information over and over again to understand it better and also learn it and be able to implement and be tax compliant. Thank you so much for joining us today. If you have not watched the entire show, you can always go back and rewatch it on YouTube, on Facebook and Twitter. The videos will always be there and more information is always there on the web portal. And you can also contact us via contact center numbers. They are always available and someone will be able to attend to you. Thank you so much for joining us today. Have a good day. Bye.
Uganda Revenue